Welcome to the Restricted Handling Daily Intel Brief. This is what's been going on in China in the past 24 hours. Today, the biggest story is the South China Sea, where a dispute Beijing would prefer to manage one rival at a time is turning into a wider coalition effort built around law, alliances, and sustained pressure. On Sunday, 14 governments, including the US, Japan, the Philippines, Australia, Britain, Canada, and Germany, marked the 10th anniversary of the 2016 Hague arbitration ruling by saying again that China's sweeping maritime claims have no legal basis. The European Union issued its own statement calling the ruling a landmark and legally binding decision. This is no longer just Manila holding up a court document while Chinese ships loom nearby. More governments are attaching their names to the ruling and opposing coercion by coast guards, militaries, and maritime militias. Beijing responded with the diplomatic equivalent of slamming every door in the hallway. China again called the ruling illegal, null, and void. It summoned a senior Japanese embassy official and warned that it would respond firmly to what it called Japanese provocations. The language was familiar. The target was revealing. China's sharpest anger was aimed at Japan, whose role in the Philippines is expanding fast. More than 1,400 Japanese personnel joined this year's Balikatan exercise, along with 3 major warships and transport aircraft. Japanese forces also fired a Type 88 surface-to-ship missile outside Japanese territory for the first time. Tokyo and Manila now have a reciprocal access agreement for joint training. Japan has supplied coastal radar and patrol aircraft, and both sides are discussing intelligence sharing and the possible transfer of 5 Abukuma-class destroyer escorts. The Philippines is building a thicker security network. The U.S. still anchors it through its treaty commitment, access to 9 Philippine bases, and a task force on Palawan, providing intelligence and technical support. Japan is adding sensors, ships, training, and political weight. European navies are also showing up. Beijing sees containment with better branding. Its neighbors see insurance. China's relationship with Russia is running on a parallel track. Chinese and Russian forces wrapped up the maritime phase of Joint Sea 2026 on Saturday. The drills included submarine rescue, air defense, maritime strike, and command coordination, with some forces continuing into the Pacific for a joint patrol. The exercise series has become regular, institutionalized, and increasingly operational. Moscow gains a powerful partner that reduces its isolation. Beijing gains practice, access, and leverage without a formal alliance. At the same time, Nordic governments are testing whether China wants the responsibilities that come with claiming global influence. During Foreign Minister Wang Yi's 5-day trip through Denmark, Sweden, Finland, and Norway, leaders pressed Beijing to use its influence with Moscow to support a ceasefire and peace talks without preconditions. Norwegian Prime Minister Jonas Gahr Støre also raised China's economic relationship with Russia, especially energy trade. The conversations went beyond Ukraine. Nordic officials raised cybersecurity, national security, human rights, and China's growing Arctic activity. Europe still wants trade and climate cooperation with Beijing, but the mood is guarded. China would like the prestige of being treated as a major peacemaker. European governments are asking for proof of work, not another glossy trailer. Inside China, Beijing is tightening its grip on money leaving the country. State Council Order Number 837 took effect on July 1st. For the first time, China's outbound investment rules explicitly cover resident individuals, not only companies. Private citizens can now face approval requirements, reporting duties, security reviews, forced asset sales, confiscation of gains, fines, and temporary bans on investing abroad. The reach is broad. It can apply to new investments and to the sale, transfer, or reinvestment of assets already held offshore. The implementing rules are still missing. There is no clear grandfather clause and no established route for people to regularize older holdings. That leaves a large pool of offshore wealth under a legal cloud. The crackdown on brokers shows where this is headed. Regulators moved against Futu, Tiger Brokers, and Longbridge in May. Existing mainland clients are being pushed into a 2-year sell-only wind-down. Futu reported more than 1.2 trillion Hong Kong dollars in client assets at the end of 2025. Hong Kong holds nearly 3 trillion US dollars in offshore assets, with more than 60% linked to mainland flows. Beijing is effectively telling residents that moving an account does not move it beyond the state's reach. The economic backdrop helps explain the urgency. China's second quarter growth is expected to slow to 4.5% from 5% in the first quarter. Exports remain resilient, especially in AI-related sectors, but consumption, private investment, employment, and property are weaker. Inflation is projected at only 1.2% this year. Economists expect Beijing to rely more on fiscal spending than dramatic interest rate cuts. In plain language, factories are producing and exports are moving, but households are not spending with confidence. Beijing wants capital working at home and on terms that support state priorities. That may help stabilize funding in the short run. It also tells investors that national security can be stretched to cover ordinary financial decisions whenever the government decides the moment requires it. Now to the intelligence and criminal network piece. Zhang Zhidong, a 39-year-old Peking University Spanish graduate, is awaiting trial in the U.S. after allegedly becoming a key broker between Chinese chemical suppliers and Mexico's Sinaloa cartel. Mexican authorities accuse his network of moving more than 1,800 kilograms of fentanyl and handling over $150 million in annual drug proceeds. U.S. prosecutors say he used more than 100 shell companies to collect cash and wire funds abroad. His personal story sounds like a streaming series, written by someone who thought realism was optional. Zhang was arrested in Mexico on October 31, 2024, placed under house arrest, and reportedly escaped through a hole in a wall. He flew to Cuba, then Russia, where officials detected forged papers. Cuba returned him to Mexico, and he was extradited to the U.S. in 2025. His removal caused real but limited disruption. Cartel sources said precursor chemicals became harder to obtain, and U.S. authorities detected a decline in fentanyl purity consistent with supply problems. The network adapted. Contacts remained, and replacement brokers emerged. A skilled connector can be removed, but the market will rebuild unless pressure reaches suppliers, finance, shipping, and the cartel structure at the same time. A final military item carries a wider strategic message. A newly publicized Chinese J-16 fighter appeared with 8 PL-15 long-range missiles and 2 PL-10 short-range missiles. Chinese commentary linked the heavy loadout to longer air superiority patrols and repeated interceptions over distant waters. Beijing is training to keep more missiles available for longer periods around contested approaches, reinforcing the broader regional pressure campaign. Thanks for listening. The headlines will keep coming, so we'll keep sorting signal from noise. Find the daily written brief at restrictedhandling.substack.com, and we'll be back with more tomorrow.